Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for your daily cryptocurrency market update. For those of you that are new around here, and we've had a huge uptick of subscribers coming into the channel, every single day at 1 p.m. UK time, we release one of these videos where we don't just cover the cryptocurrency market, but we look at it relative to the macro environment and other markets. We are one of the few channels in the crypto space that have the knowledge to do this. And we present it to you every single day at 1 p.m. And we have got a jam-packed video ahead for you. Not only are we going to be looking at yesterday's US data in the form of non-farm, but I really just want to spend this video emphasizing the fact that I really do believe, and we've been bullish now for 6 months, it's paid us to be so, that the markets are on the cusp of further upside. You've got gold looking like it wants to break out. You've got silver at a similar position. You also have the S&P, which we believe, under the context of sideways rates, could see new highs. And where we've got that from, there's a number of places we've got that from. But one of the main ones, the kind of macro reason, is what happens to the S&P over the past 23 years of sideways rates. And actually further historically back, the S&P, the stock market, typically does under sideways rates. We saw the cryptocurrency markets, the stock markets actually do very well and get a real boost just from the Fed going from 75 basis points to 25. We do now believe that they are done with rate hikes, and we've got the 2-year yield that we look at for this. We're going to be covering all of that. We're going to be looking at the stock market a little bit. Nevada hit $1 trillion in terms of a market cap with a $30 billion revenue. So there's a huge disconnect there. And the stock market is multiples times earnings. But actually, we think the stock market is rather in line, perhaps not Nevada, with the money supply, the very thing that these stocks are weighed against. We'll look at how yesterday's data affected the market and, of course, cover a little bit of true inflation. But what I want to do to start things off, guys, as always, is go over to the charts and kick things off there. So the cryptocurrency market had an okay week. It didn't really do much. And, of course, we had non-farm yesterday. So actually, let's look at that. The non-farm job number, and remember, this is what has backed Jerome Powell to continue to up interest rates, came out surprisingly very strong, nearly double what was expected. The expected was 193,000, and the actual non-farm number was 339,000. So this is showing a huge increase in jobs. However, we did see an uptick in unemployment. Now, we always look at both sides of an argument. We know the correlation with unemployment and the likes of the S&P. As that rises, we typically do see downside in regards to the S&P. It's very, very well correlated. Unemployment at a high, stock market at a low. Unemployment at a low, stock market at a high. Now, there's a little bit of interesting things going on here. So it is worth paying attention to this and keeping this in note. But yesterday's non-farm payroll really should have increased the probabilities or given Jerome Powell more room to do more rate hikes. Now, one of the reasons we think rates are done is because we look at the debt markets. The debt markets are the most important markets out there, in my opinion, because they are ultimately the ones most connected with the money supply, which everything is valued in. We look at Bitcoin USD, we look at SPY USD, Spider, NASDAQ, whatever it may be. And the bond markets are very important to get right and are kind of your macro that you then trickle down into. So if you're on the right side of that, you'll typically do quite well. So we did think that this would increase the probabilities of a rate hike, which is coming in 11 days, just over 11 days. However, the probabilities, according to the CME group, has 74% at no hike and 25% at one more 25 basis points. Again, go and look at the correlation. We've done it plenty of times on this channel between the 2-year yields and the Fed funds rate. It leads the Fed funds rate. Typically, a 2-year yield tops out. You do a 25 basis points, which we may have just had, or roundabouts. And then you get that sideways period for rates, which we're expecting for our macro reasoning. And actually, you've seen the stock market going and putting new all-time highs on plenty of occasions under this context. Now, we have a technical reason to expect that. You know, if we flip over to the S&P before we bring it back to Bitcoin, we could have some sort of an inverse head and shoulders here. Depending on whether you take a log or a non-log target, this actually both get you to your all-time highs. And remember, we had lots of people shorting here, which was an obvious short. You short at resistance, you long at support. And ultimately, they've been well and truly wrecked. And that's because they're on the wrong side of the trend. Look at the NASDAQ, which is doing absolutely sensationally. Could have a bit of a double top structure here. We think all markets broke out. We took a non-bearish approach at the start of the year and have been accumulating cryptocurrency since. You want to find out more about that? We currently have some trades on in the group. Please do consider joining the Patreon. For the money, it is absolute value. And you'll see that when you get in there. And if it's not for you, you can always cancel your membership. So markets are breaking out, okay? Bitcoin will do that. 30K is the target that we think it will break. This inverse head and shoulders that we have down here gives you either your 35K or your 40K plus. Remember, yesterday we looked at JP Morgan calling for a 40K plus, 45K Bitcoin. And they were saying that on the back end of gold, which is essentially in a bull flag structure, that it popped out the top of, came back, retesting, and we do expect this to go on and take new all-time highs. How is your bear market going, ladies and gentlemen, since the start of the year? We've been bullish for the past 6 months now after being bearish for most of 2022. We were a little bit late to getting out the market. However, you know, we're not claiming to be able to time everything perfectly. We just want to be on the big trends and ride them in regards to the asset classes that we're interested in. And actually, we are a perma bull on blockchain technology in regards to the fact that we think where it is at $1 trillion market cap, it's going to the tens of trillions. It's not even regulated yet. That's all still to come. With any technological revolution, you do have a pushback, ultimately leading to, you know, there's always skepticism greeted with it from a regulatory point of view, from a, you know, legacy system point of view, but it's all part of adoption. So gold is on the precipice of new all-time highs. If you look at what happens historically with new all-time highs being taken, this is where you get these big runs, ladies and gentlemen. And we do think the same thing could be happening for gold. That's going to boost Bitcoin, as they are both in this kind of anti-fiat category. You also have the dollar that we do expect to roll. The dollar, of course, on non-farm payroll yesterday did see some strength. You know, this is a huge wick coming in, buying it up. And ultimately, that was expected. However, personally, I was kind of expecting the markets to sell off more than they did. Now, really, you got the dollar up and gold down. But if you look at the stock market, for example, it did very well yesterday. This is a 3-daily chart. You had Tesla, Coinbase. You had GBTC, which we're saying is our institutional kind of vehicle for Bitcoin. Don't understand why retail would buy it. That, of course, did what... And I looked at, I did a video yesterday where I covered altcoins that the Patreon members wanted me to cover, technically in a kind of ad hoc session. And you'll see this similarity across the board with altcoins. They've rallied into resistance. They're retesting, ready to take it again. You know, this is what we think is to come for the altcoin market. Bitcoin dominance is at a very, very, covering so much information in such a short time here, guys. This is toppy in my opinion. You could see Bitcoin dominance, and this is a range trader's wet dream, really. You could see dominance start to roll, and we could have an alt season on our hands. There's lots of things going on. But ultimately, markets are on the cusp of breaking out, guys. And I don't know how more. Maybe there's a little bit more sort of wiggle room. But when you take these levels, in my opinion, we're positioned for it. We've been positioned long since the start of the year. You know, it's something you don't want to miss out on. Because I understand there is a lot still of doom and gloom out there. The difference between me and the bears right now is timing. We still believe the yield curve is yet to play out. We just don't think it plays out like historically we've got data for until the point of uninversion. And actually, talking about unemployment that we just brought out chart, you can look at unemployment with the yield curve and it going back up and unemployment on the rise. So there's a lot that we look at that when we think something is going to play out in the markets, usually there's a number of reasons associated with why. And we don't always get time to cover them on the channel, but we always give you the kind of bigger, broader overview of everything, which is ultimately, we think rates are about to go sideways. If you look at what the context, we'll do it again, guys. As it's Saturday, and bear in mind the technical structure that could take the S&P to new all-time highs. Fed fund going sideways. So this is at the point where it went sideways. Look at the rally that it had. Again, Fed funds going sideways. And what's the historical context here? You're at a low point when it goes sideways. Tightening, tightening, tightening. Markets adjust, which they're doing. low. Sideways rates, high. The exception is here where it didn't... Can I play around with this enough to make the data fit what I'm trying to say? No, I'm joking, guys. But ultimately, even under the pretext of sideways rates here, 2000 was an interesting one because you had the dot-com boom. But if you look at when rates went sideways, the S&P still went up. And you've still got people calling this a bear market. Well, is Apple in a bear market, ladies and gentlemen? Get rid of this. You tell me. The thing is with being bearish, if you're bearish for long enough, eventually you'll be right. But we just simply think that... What do I try and do as an investor and a trader? That's make money, and you have to be positioned to do so. So I know so many individuals that are great at calling the markets, but they make no money from them. It's very different trying to make money off the markets and trying to predict them. We'll all get things wrong trying to predict the markets, including myself. You know, I honestly thought that we'd have a bit of a longer bull market than we did. I thought we did very well getting in at the lows of sort of, we were accumulators all throughout the bear market. Even March 2020, we were buying that dip and we rode it up. But I did think it was going to take a little bit longer. It fell short. We didn't quite get some of the targets that we had. Huge lessons learned. And ultimately then we flipped bearish and mitigated a lot of that downside. But are these stocks in a bear market? And I want to move on to this. This is a chart and record weekly inflows to tech funds. So tech stocks just saw their biggest weekly inflows on record. Now, of course, this has a lot to do with Nevada. NVD becomes the first ever $1 trillion company to have less than $30 billion in revenue. Now, word of warning on NVD. Everybody wants to short that bugger. Be careful, guys. Because I'm telling you now, right? One of the things that we learn as investors is when we're looking at an asset class that we've spotted, we think it's going to do well, you want to go to the charts and you actually want to pick stocks in those asset class that have a number of criteria. One criteria is that there isn't many overhanging branches above them, meaning there's not a lot of price action for it to run into an active resistance. When you have clear skies, things get explosive. So be careful here. This is probably one of the a reason to be bearish perhaps on the markets is because, you know, this won't last forever, but you could see it at 450 before it tops out. And you're going to get wrecked trying to short it. Don't try, in the same way of not trying to catch a falling knife, don't try and stand in front of a moving car, you know? But how's your bear market working out? Again, you got this DNA here, all with this kind of, you know, you could say the S&P is just further behind as more of a kind of sluggish mover, and then the Nasdaq's further ahead because it's got more sort of tech in it. We are long a number of altcoins, like I say. Bitcoin's here. We do think this is going to reassert ultimately. And you've got a lot of data coming out. We've got the CPI the day before the rate decision. And then we've got the PMI on the day of the rate decision. Now, we believe that inflation is a lot lower than 4.9%. True inflation has all of a sudden become very popular. We've been using it on this channel for years. We've been posting about it a lot, really, since all of this year. True inflation has a 2.73%. Your CPI has you at 4.9. Okay? I think this has a lot to do with why this didn't adjust and the markets didn't look to price in higher rates. Now, remember, we are watching, and this is a bit of concern to me, the yields. We want this to roll, and we want bonds to go up, obviously, on the back end of it, the other side of this trade. And that's going to go in line with the markets. And actually, this is going to be positive for banks. You know, if we look at certain commodities, if you look at oil, for example, it is getting a bid, but it's getting a bid at this really key level here. We do think oil is going to roll. Look at wheat, for example, put in a new low. Natural gas, absolutely smashed. And we can look at a basket of others. So we have covered a lot, guys, in a very short period of time. But really what I want to emphasize with reasoning, technically, fundamentally, what I really want to emphasize, guys, is I do believe the markets are heading for a real decent time. It could be short-lived, but that's ahead of us. And everything right now is at your resistance. Remember, falling back onto those sideways rates, what did the markets do? Look at gold, for example. Gold did this under the pretext of them going from 75 basis points to 25. you're about to now have... Gold did this. You know, what did the stock market do? Stock market, you know, this rally here, including with Bitcoin, up here, and then you've had a pullback, was largely caused, sorry, here. So forming this right shoulder, this rally here was actually caused largely by them going from 75 to 25. We now believe they're going to go to no more hikes. And we've shown you what the S&P typically does. What do you think Bitcoin's going to do? Your altcoins, I do think, are going to have their day in the sun. We are long, heavily long altcoins. We were majority US dollar cash last year. And now we have small cash reserves. Always keep cash reserves. However, we're mostly back in the crypto space. And on that note, guys, I think I'm going to love and leave you. So let's see what comes. Non-farm didn't really affect too much. Unemployment rate is something to watch. Very much so. Certainly if you start seeing huge upticks in it, that's going to come in correlation with the stock market. We do think inflation's coming down, and we think the markets are ultimately somewhat ignoring the Fed. Bitcoin's down on the weekend by 0.38%. It's largely irrelevant. The weekend's a very low volume. We'll see what the next week brings, and we'll be here every single day, keeping you up to date, giving you not just analysis on the cryptocurrency market, but the broader markets, and really helping you navigate what at times can be a very interesting environment. On that note, I'm going to love and leave you. Have a smashing Saturday, guys, and I will see you all in the next YouTube video. Thanks a lot for watching. See you in the next one.